Hello friends, today we are going to discuss the concept of simple interest and compound interest. So basically these concepts are used in banking and financial sectors. So first of all we'll try to understand what is meant by the interest. So suppose if I get a loan of 5 lakh rupees from a bank for 3 years and with the rate of interest is 10% in that case. So that means every year I have to pay what 10% of 5 lakh rupees, that is 10% of 5 lakh is what 50,000. So each year I have to pay interest amount of 50,000 for 3 years. So I am taking a loan from bank for of rupees 5 lakh rupees. So in 3 years I have to return total amount of whatever the amount I have taken from the bank, that is 5 lakh rupees, plus 10% interest for 3 years, that is 50,000, 50,000 and 50,000. That means total amount I have to pay to the bank in 3 years is what 6 lakh 50,000 rupees. So that extra 1 lakh 50,000 rupees is the amount we can call it as an interest amount. So in simple word we can say that the interest amount is nothing but giving extra amount for the use of that particular money. So this is a vice versa condition also. So when I deposited money in a bank for 3 years of rupees same, that is 5 lakh rupees. So in that case also, depending on the bank interest, I am getting certain extra amount every year on my amount. So this example I consider with reference to the concept of simple interest. So what is mean by that, we are going to discuss that in coming soon. So in simple word we can say that interest is nothing but giving extra amount for the use of particular money. Okay, so there are basically two types of the interest, simple interest and the compound interest. So let's try to understand the difference between these two with some simple example. Suppose initial amount I am having is what 1000 rupees and the rate of interest on that amount is suppose 10%. So in simple interest, every year the interest is calculated on this principal amount. So principal amount means initial amount here, that is 1000 rupees. So for first year here the interest amount for simple interest is what we are getting 10% of 1000, that is what 100. For second year the interest amount we are getting for the simple interest is what again 100, that is the 10% of the initial amount, that is the principal amount. That means in such a way in every year we are getting the same principal amount in the simple same interest amount in simple interest, as we are calculating that interest amount every year on the principal amount, that is the initial amount. So let's consider about the compound interest now. So suppose initial amount in the compound interest is again same 1000 rupees. So the first year interest in compound interest I am getting same, that is as it is calculated on the principal amount. So that interest is what, interest amount is 100 rupees. Okay, now in order to calculate the next year interest amount in the compound interest, the amount is considered as a previous year amount. So initially we are having 1000 rupees and the interest we are getting in first year in the compound interest is what 100 rupees. So total amount after 1 year is what 1100. So while calculating the next year interest amount, the interest is calculated on the previous year interest amount in the compound interest. So here 10% of 1100 is what 110. So in this 1100 we are adding 110, that is the 10% of this, so that we are getting next year amount is what 1210. Okay, that means if you consider only the interest amount, so we are getting the total interest amount here is what 210. Same way when we are calculating the third year interest amount in this case, so here that is calculated with respect to previous year amount. So here the second year amount is 1210 here. So 10% of that is what 121. So we add in that, so we are getting here what 1331. So if you consider only the interest amount in that case, if you see that after 3 years in the compound interest you are getting a total amount of rupees 331, that is the interest amount for 3 years, and in simple interest you are getting total amount in total interest amount after 3 years is what 300. That means in simple interest each year you are calculating the interest amount on the principal, that is the initial amount, whereas in the compound interest you are calculating the interest amount with respect to the previous year amount. So that is the major difference between simple interest and the compound interest, and that's why we are getting more returns in the compound interest as compared with that of the simple interest. So this simple animation again helps you to understand the basic difference between the simple interest and compound interest. If you see that in the figure, the simple interest, in that case you are getting a fixed amount each year, that is for first year, second year, third year, as we discussed here. For each year we are getting 100 rupees amount. But for the compound interest, you are getting each year increase in the interest amount, as we are calculating the interest with respect to the previous year amount. So we are getting more returns in the compound interest as compared with the simple interest. So that is the basic difference between these two. So I hope you get this point. So with this we'll go for the basics of the simple and compound interest with some simple examples. So first of all, we'll focus on the simple interest. So we'll see one simple problem related to this. So just read the statement, all of you, first, and try to understand the meaning of that problem statement first. So this is a problem related to what? The simple interest. So if you read the statement, after how many years will a sum of rupees 10,000 becomes what? Rupees 17,500 at the rate of 15% per annum. And these are the options. Okay, now here if you see that in the problem they have mentioned the principal amount, that is the initial amount, that is 10,000. They have mentioned final amount, that is what? 17,500. So difference between these two is nothing but what? The total interest amount, and that is nothing but what? 7,500. Okay, and they have mentioned the rate of interest also, that is R is what they have mentioned, 15%. And they have asked us about after how many years that amount will be of rupees 17,500. So we have the basic equation, that is what? Interest amount in simple interest is equal to what? P into T into R divided by 100. So P means principal amount, that is given here. Okay, T, that we have to calculate here. Rate of interest given 15 divided by 100. So interest amount just we have calculated, that is what? Final amount minus principal amount, that is 7,500. So from this we can calculate T as what? 7,500 into 100 divided by what here? 1,000 into what? 15. So 15 5s are 75. So here 2020 get cancelled, this 1010 get cancelled here. Okay, then we are getting here time period as what? Here 15 5s are 75. So we are getting 20 here, 100, this 100 is there. So this 2020 get cancelled, this 1010 get cancelled here. So number of years we are getting here T as what? 5 years. Okay, so after 5 years we can say that this principal amount of becomes what? 17,500 with a rate of interest 15%. So we can solve this problem by using other logic also, by using percentage. How we can see that? So here see the rate of interest is what? 7,500. Okay, that is the total interest amount we are getting. Rate of interest is actually 15%. Total interest amount we are getting 7,500. Okay, now the principal amount given as what? 10,000. So rate of interest is given as a 15%. So 15% of 10,000 is nothing but what? 1,500. Okay, that means for each year you are getting a total principal amount, total interest amount is of rupees what? 1,500. So in order to get total interest amount as 7,500, how much time will require? So number of years in that case is what? Total amount, that is total interest amount divided by the interest amount you are getting for 1 year. So here if you see that 15 5s are, you are getting again the answer as what? 5. So by using this percentage logic also we can get the answer for such type of questions based on the simple interest. So answer is 5 here, that is option D is the correct here. So we'll go for the next problem now. So the next problem, just read this, then we'll go for the solution. So what is the problem statement? What will be the simple interest on rupees 700 at 10% per annum for the period of from 5th February 1994 to April 18, 1994? And these are the options for this problem. So first of all, see that the principal amount given here is what? 700 rupees, and the rate of interest on that is given as what? 10%. So 10% of 700 means what? We are getting interest amount for 1 year is what? 10% of 700 means what? 70 rupees we are getting. Now if you see that the given duration in the problem, that is from 5th February 1994 to April 18, 1994. So if you calculate the number of days for this given period, so that days we are getting as what? 73. So simple logic we can apply here to calculate the interest amount for this given 73 days. So for 365 days we are getting the interest amount as what? 70 rupees. So for 73 days, how much interest amount you are getting? Simple cross product we have to take it to get the answer. So here we are getting 73 into 70 divided by what? 365. So here 73 5s are 365 is there. So we are getting 70 upon 5 means what? 5 ones are, then 5 fours are. So the interest amount for the given period or the given duration we got is as what? 14 rupees. That is for 73 rupees, 73 days, the interest amount you are getting as what? 14 rupees. So if you see that, option A is the correct for this problem. Let's go for the another. Just read the problem statement. Try to understand the given data first. So what is the simple interest on a sum of rupees 700? So principal amount here is again 700. So if the rate of interest for first 3 years is 10%, so for first 3 years the rate of interest they have mentioned as a 10%, and for next 2 years the rate of interest is mentioned as what? 15%. Okay, so we have to calculate the total interest amount for 5 years. So we have the basic equation, that is I is equal to what? PTR upon 100. So here P we know that 700. For first duration, the number of years 3. 700 into 3 into R, that is what? 10% given here, divided by 100. So with this we are getting here the value of what? 7 into 30, that is what? 210. So by using the same formula, if you calculate the interest amount for last 2 years, that is we are getting I is equal to again what? PTR upon 100. So for this one, P is equal to what? Again 700. T is equal to what? 2. R is equal to what? 10. So here the rate of interest is not 10, it is 15% divided by 100. So here 2020 get cancelled. So again you are getting 7 into 30, that is what? 210. So for first year 3 years the interest amount we are getting 210. For next 2 years the interest amount we are getting as a what? 210. So total interest amount we are getting is what? Addition of these two, that is what? 420 rupees. So for 5 years interest amount is what? 420 rupees. So this is the one way to get the answer for this question by using the formula, or you can use again simple percentage logic. So see, 700, 10% of 700 means what? 70. So for 1 year you are getting 70 rupees. How many years are there? 3. So 70 into 3, the total interest amount for the first 3 year you are getting 210. For these last 2 years the interest amount is 15. So calculate the 15% of 700, that comes to be what? 105. So that is the interest amount for 1 year. So we are having 2 years, so we are getting total interest amount here as what? 210. So addition of these two, again you will get the same answer, that is 420. So again we solve this problem by using both the methods, that is by using the formula and by using the percentage logic also. Okay, let's go for the next. So here the option B is the correct for this question, that is rupees 420. Go for the next question. Just read the question first of all and try to understand the meaning of that, so that we can solve that problem easily. So read the statement. A part of rupees 40,000 is lent out at 6% per 6 months. The rest of the amount is lent out at a 9% per annum after 1 year. The ratio of the interest after 5 years from the time when the first amount was lent out is 45 is to 13, that is first is to second interest amount ratio is given. So find the second part that was lent out at a 9%. So here they have mentioned the interest amount for first is to second. So interest amount in the simple interest we know that that is nothing but what? PTR. In the problem they ask you to calculate the second amount that is given with a rate of interest of what? 9% per annum. So we consider that amount as X, P. Number of years for that is what? 4, because after 1 year the second amount is given. and the rate of interest for that is what, 9. So if we consider the second amount as x, then the first amount is what, obviously 40,000 minus x, because total amount is 40,000 and that amount is given for 5 years. Okay, because the total duration is given as 5 and the rate of interest in the problem they have mentioned that's 6% per 6 months. So for 1 year the interest we are getting is what, 12. So for given interest amount ratio we form one equation. So here one equation, one unknown, that is x. If you find the value of that, we'll get the answer. Okay, so these are the options for this problem. So we solve this now. So here if you see that 4 3s are 12, 3 1s are 3, 3 3s are 9, so 5 9s are 45. So we are getting 40k minus x is upon x is equal to what, here 9 3s are 27 by 30. So we take cross product now, so that we are getting 27x is equal to 13 into 40k minus 13x. So just we shift this part of x towards the one side, so we are getting 40x is equal to 13 into 40k. So finally with this we are getting x is equal to what, this 40 get cancelled, so we are getting 13k. That is the second amount lent out of that 40,000 we got here as what, 13,000. Okay, so if you see the options now, option A is the correct.